in Belleville, Ontario. We are talking to Mark. Good evening, sir.
Good evening. My question is on Thomson Reuters. Thomson Reuters is very large, and I'm just wondering what sector of the market is it actually categorized in, or is it basically just unique? And the second part is it so large now that the needle doesn't move? It's had a good year, but for 3 years it was pretty stagnant. Is it basically just the utilities like the major tech companies? All right, thank you.
Right. So, Mark, a couple of good questions in there. I really look at Thomson Reuters as a media company, ultimately. 58 or 60% of the revenues come from financial services, and that's the information terminals that they have. Mm-hmm. That's a big part of the business. One of the challenges that they have is that financial services have been getting smaller over the last couple of years. The number of screens sitting on desktops at investment banks, around North America has been getting fewer and fewer. But the potential catalyst and the reason to own this right now is they have just been in the process of launching a new platform called Icon, which is aimed at competing with the Bloomberg platform. And I think it remains to be seen as to whether it's going to be successful. But you get a 4% yield. It's not an expensive company. There is a catalyst for an expanded multiple if they can get a little bit of a lift. But they do have a challenge. Now, we happen to believe that markets are getting a little bit better here and that they could get better for a while. And if that's the case, again, typical of investment banks, may wind up cutting people at the wrong time. So you could see some expansion later on over the next couple of years.
All right, David, next up is an email on American Tower, a company you've talked about before, AMT, on the New York Stock Exchange. I've recently heard that it's overpriced and should be shorted. What's your opinion of this stock?
Well, I think that some of the research commentary that has come on this, some of it came from Muddy Waters, which is sort of famous for trying to roil companies, talked about the price that they've paid for towers in emerging markets. So this company, as some may not know, owns cell towers, and they lease space out to the service providers who put up their transmission gear. And it's done remarkably well over many years. And so it only pays about a 1.5% dividend yield. The view was that they've spent a lot for some of the towers they have in emerging markets. But the fact is what you're buying is a call on the future use of cell phones and expansion of data use in those markets, which I think we have to agree is going to grow quite rapidly. So certainly, that had an impact on share price. Certainly, it participated to the downside with the REITs. I like this company. And so if you were to see the REITs start to firm up, I think this is one you can certainly take a look at, and we'll see how it plays out.
It's now officially a REIT. And did Muddy Waters not basically accuse them of fraud in Brazil?
They did. And again, I have seen nothing that would substantiate that. But certainly had an impact on share price, and,
right.
And I think that you can blame some of it on sector move and some of it on some of that commentary.
It had a 20% drop, so you figure that's a healthy correction, and that's a decent entry point here?
Look, it's had a correction. I don't tend to buy dips, right? So I want to see it firm up, and I want to see the group firm up, and we'll look for more additional information. But I think that when you talk about paying too much for assets, you have to look at the growth rate that they can provide going forward down the road, and they should be expensive.
It's had a decent pop lately, American Tower. We'll take a short pause here and come back with more questions after this.